Horwitz joining us live from the CME Group in Chicago. Todd, a lot of folks scratching heads on this cattle trade. We heard some 132 now already trading in Kansas, even though that's steady with last week. It's still $10 from where $10 from where June is trading.
Well, I think this is, again, we're coming into a big demand time, right? We're coming into the Memorial Day weekend. We're coming into the regions that prices are held higher just normally. So I think the cash price is going to be higher. But I think when you watch the money flow and you watch the future where the money is flowing into, I think that's telling you that maybe we're going to start to see a little bit of selling pressure. However, I'm looking at 122 in the fats to say, hey, that's my level that I've been watching. That was my support on the way down, and then became resistance. We broke out, got to the 123, 124 level. This morning's low, 122.50, we bounced. I think there's an outside chance after this calms down in the cash market, because remember, the cash market was just getting slaughtered about 3 weeks ago. I think we're going to see 118 is a target that I'm looking to be a buyer. I want to be a buyer. It may end up being 122, but right now I think there's some room to work our way down, especially after this holiday passes by and we get away from some of the people that want to get out there and buy.
All right, that may be a dividing line here right after Memorial holiday, to be sure. Feeder cattle on the day, so we're down 44, by the way, in those nearby June futures. August feeder cattle up 3, 148.80. Not a lot of trade. I haven't seen a lot of movement. I'm not sure what the trade volume looks like to you.
Well, Mark, I think that when markets get into what we call consolidation, and that's exactly what the feeders have been in. We had the big move up, we had the big move down to 138, and then we get that big move up, spike over 150, and we kind of settled between 145 and 150. I think that's the range we're going to stay. I think you want to be a buyer if we can get down to 145. You want to buy down there and see if we can break it out, because I do think we're going to break out higher, but I think for now you got to be very careful of this range. I wouldn't want to buy too close to 150. I'd rather wait or pay over 150, because I think that's a better trade. So right now, I'm looking for the 145 to come back and play, and I think that's the range we trade until we can break out to the upside.
All right, looking at the lean hog complex, open interest, the highest since back in October of 2014. A lot of folks say that means more volatility, and we're seeing a lot of, $1.50 pressure, $1.60 in July, lower on that lean hog contracts.
Well, I think that, again, we've been watching these hog markets, and they've been stuck in this range. And we talked about yesterday when they were over 83. I said, look, if we can't get back through 84 and break out, they're probably going to come back down to 80. This space has been very confusing and very tough to really, from a trader's standpoint, hard to trade. I'm now become neutral. Instead of bullish hogs, I've become neutral because it's too tough here, and they can just as easily now break to the downside. And as you know, as we go farther into the season, we get into that backwardation formation, and that's never a bullish sign. So now I'm a little bit more careful here. I want to see what happens between 80 and 84. If we can break to the downside, I think probably 76 is in the cards.
All right, Todd, we'll look forward to getting with you tonight after the close on our Rural Evening News. Thanks a lot.
Thanks, Mark.
Thank you. Todd Horwitz, Bubba Trading. It's BubbaTrading.com. Information there to help whatever buyers or sellers. He's there to help our viewers and listeners all he can. He does love RFD-TV and Rural Radio. So a great man to have on our team.
All right.